Circle's profits just soared over 200%. So why is their stock getting absolutely crushed?
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. Let's kick things off with a look at the market. Over the last 24 hours, things have been a little sleepy, a bit of mild volatility. The total crypto market cap took a tiny dip, down about 0.5% to $3.54 trillion. Bitcoin has taken a little breather, down 1.2% and trading around $61,900. Meanwhile, Ethereum is holding its own, inching up 0.6% to $3,473. Most of the market is just chilling, moving less than 1%. But where's the action? Check out the real-world asset sector, or RWA, up a solid 2%, and the star of the show today is PayFi, which is leading the entire market with a 3% jump. You'll love to see it. All right, let's dive into our top story. Circle, the company behind the USDC stablecoin, just dropped their Q3 earnings, and wow, the numbers are huge. Revenue hit $740 million, that's a 66% jump from last year, blowing past the $707 million analysts expected. Net profit, an incredible $214 million, up over 200%. So with these blockbuster numbers, you'd think their stock would be heading to the moon, right? Well, not exactly. The stock actually slipped. So what gives? It comes down to two big worries from investors. First, there's a massive stock unlock coming. All the shares that haven't vested yet are about to become tradable the day after this report. Think of it like a floodgate opening. A huge new supply of stock could hit the market, and that pressure can push the price down, even with great news. Second, and this is the big one, is where Circle's money comes from. A whopping 95% of their Q3 revenue was from interest income. Basically, they hold billions in assets backing USDC and earn interest on it. But with everyone expecting interest rates to fall, investors are worried that Circle's main moneymaker could take a serious hit. The big question is whether their other business segments can grow fast enough to make up for that potential drop. It's a classic good news, but situation. Next up, some massive news for the XRP army. The Canary XRP ETF is officially set to debut on the Nasdaq on November 13th. This is a huge milestone, bringing XRP exposure directly to traditional finance. What's really cool is that it supports both physical and cash redemptions, giving institutions a ton of flexibility. And you know we've got you covered. SoSoValue will have a real-time dashboard ready to go so you can track the ETF's performance from day one. This could be a major catalyst for more institutional money flowing into XRP. In regulatory news, we actually got some helpful clarification from the SEC chairman, Mr. Atkins. He laid out two main principles that align with the new Clarity Act. First, a security is a security, no matter if it's on a blockchain or a piece of paper. Simple enough. Second, it's all about the substance, not the label. If you're buying an asset and expecting to profit from the work of a central team, that's the classic Howey test. It's probably a security. But here's the exciting part. He also clarified what is generally not considered a security. This includes digital commodities, network tokens, digital collectibles like NFTs, and digital tools like memberships or tickets. As long as their value comes from a decentralized system and their function, not from a management team promising you profits, the SEC seems to be saying, that's not our lane. This is a big win for builders and provides some much-needed clarity. Now for a more serious story out of Dubai. The Digital Economy Court has issued a global asset freeze on a staggering $456 million. These funds are linked to TechDirix, the issuer of the TrueUSD stablecoin, or TUSD. The court found credible evidence that funds meant to be held in reserve to back the stablecoin were instead diverted for long-term loans and private investments. This created a massive liquidity gap. If a wave of redemptions had come in, the money simply wouldn't have been there. It was reported that Justin Sun had to step in with a bailout to fill that shortfall and prevent TUSD from depegging, which could have triggered a much wider crisis. This is a landmark case, marking the very first global freeze order by the Dubai Digital Economy Court. Finally, let's get into some on-chain drama. The decentralized exchange Hyperliquid had to temporarily pause deposits and withdrawals after a wild price manipulation attempt on the Solana meme coin POPCAT. On-chain data tells a crazy story. A trader pulled about $3 million in USDC from OKX, spread it across 19 different wallets to fly under the radar, and then opened a massive $30 million leverage long position on Hyperliquid. But here's the twist. The trader then pulled a $30 million buy wall, instantly crashing POPCAT's price by 19%. The move inflicted about $4.9 million in losses on Hyperliquid's liquidity provider vault. Ouch! The event has sparked a huge debate about the risks of these LP vaults and, more importantly, raises questions about how decentralized a platform really is if the team can just hit the pause button on the whole system. That's a wrap for today's update. Catch you tomorrow. Same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research all in one place at SoSoValue.com.